Hi everyone, Casey from Tailored Property Wealth, and in today's video, we're breaking down the 18.6 year real estate cycle. If you understand this cycle, it's going to give you the confidence and the education to be able to go out and take action as an investor and target areas that are earlier in their growth cycle, as well as it's going to help you to mitigate your risk and also seize opportunity. Phil Anderson wrote this book, The Secret Life of Real Estate and Banking. And in this book, he goes through over 200 years of booms and busts in the US market. Phil Anderson's work was inspired by Fred Harrison, who wrote the book, The Power in the Land, and he analysed the UK property market for 200 to 300 years. Both Fred and Phil's work analysing these markets identified that there's an 18.6 year real estate cycle. As per the real estate cycle that they identified, the start of the last cycle was around the GFC, and that was the last big financial crisis. After this recovery period, we start to enter the first half of the property cycle. Now, in that initial stage of the property cycle, a lot of people in the marketplace are fearful and they're scared. So governments then start to stimulate the economy to get things heating back up. Now, in Australia, what typically happens in the first half of the cycle is where Sydney and Melbourne perform above average. What then happens to end the first half of the property cycle is we enter into a mid-cycle slowdown. Now, the mid-cycle slowdown in this part of the cycle was COVID, and it was the financial crisis that we had. In the past, there has been the dot-com crash or the recession that we had to have. Now, part of this mid-cycle slowdown is that the property markets globally tend to correct up to about 10%, and the stock market can see a correction of up to about 30% in the mid-cycle slowdown. Now, in this part of the mid-cycle slowdown, because there is some negativity, this is where some people can panic sell their assets until they realize that it's actually not as bad as they once thought. Now, this is where we start to enter into the second half of the cycle. And this is where we start to see a big lift in infrastructure spending. We start to see the banks lending more money. And this is where individuals have high levels of cash and high equity also. Now, in the Australian property market, when we're going into the second half of the real estate cycle, this is where some of the other capital cities start to perform better, such as your Adelaides, such as your Brisbane and your Perth. Now, in the second half of the cycle, once we start to reach the top of the cycle, everyone starts to get FOMO. They've seen everyone making money throughout this journey on that cycle, and they want to get in and they want to take advantage. Now, in this winner's curse here, this is where property prices are increasing, stock prices are increasing, and gold is also increasing dramatically. Now, at this point in the cycle, this is where you also see some of the tallest buildings in the world be finalized and finished. People are starting to get over leveraged and everything's buzzing and pumping. And this is why if you're only entering the property market at this winner's curse phase, you're at high risk because you came in, you've purchased it in this inflated environment, and then what's typically going to happen is we're going to get a correction. After the winner's curse is when we get another correction, and that's the start of the next cycle. Now, over here at this correction, what we typically see is Australia corrects about 10 to 15%, the US market corrects 15 to 40%, and you may see the stock market correct up to 60%. So it is a larger correction than this mid-cycle slowdown point. Now, if you're a sophisticated investor, this is where massive opportunity lies. When everyone is fearful, you can be greedy. You can go in and purchase well under where the property values might have been 1 to 2 years ago and really seize that opportunity. So this is a really, really simple broken down version of this 18-year property cycle. And if you have this knowledge and you truly understand it, it's going to give you a big edge when investing. You're going to be able to go through and select which asset in which city you want to target at that point in the cycle to take advantage of those areas that are primed for growth. It's also going to help you mitigate your risk as well. You might know which markets to steer away from or which part of your overall plan you're going to execute at that point in time. If you want to purchase a high quality investment property and you want to take advantage where we are currently in the property cycle, reach out to us at tailoredpropertywealth.com.au. We'll be able to catch up and have a chat if there's an opportunity to be able to help you on your property journey.